And yet we've got breaking news. CBO is now saying the deficit's going to be bigger than we expected. That's almost a constant in this world we live in these days.
Sadly, yes.
I mean, the Fed really is between a rock and a hard place.
So, okay, they're lowering rates because that's a much easier thing to sell to the American public, right? You know, if you're Donald Trump, you can get up there and say, your mortgage is going down. Okay, fine, I get that. If he were to go up there and say, we are ending quantitative easing, we're keeping liquidity in the banking system, you're like, wait, what? Right? And yet, it's that second thing. It's keeping the Fed balance sheet larger and liquidity in the banking system that I think is ultimately more important. And I wish that rates weren't going down. I'm with Esther George and Erica Rosengren.
And yet, they've said from the Fed that our goal is they want to sustain the recovery. And we know from this CBO report that the tariffs, beyond the Fed's control, the tariffs are going to have a negative impact on GDP. They now say the CBO drop about 0.3%. Is that enough to make Powell and company say, you know, oh my God, clutch the pearls, we got to cut rates?
I hope not. I think that I'm with you too. I think that rates we're at a point that we're going to need to have some buffer should something really bad happen. And we're not at the place where anything really bad has happened.
The only way I would say you would need to sort of cut rates is because Fed policy can't be in a vacuum. When you have other central banks around the world going in the other direction, it puts pressure on the Fed to at least get a little bit more in line with them.
So President Trump, I mean, a full 1% cut would be a bit much, but it sounds like what you're saying is President Trump's right. The rest of the world's been cutting. The Fed needs to cut.
Well, I mean, when you look at the other reasons as to why the Fed would cut, there really aren't many, right? We have, low inflation, right? I mean, we have great consumer. We have consumption still at a clip of 3% growth year over year per quarter. So I think the main reason for the Fed to cut right now is just to be more in line with other central banks.
There's probably some truth to that, and I have to tell you, think about it. If you were to go out and get a 30-year fixed rate mortgage right now, you'd pay about 3 3/4. The lowest it's ever been was about 3.35, and that was 3 years ago. So we're within half a point of the all-time low, and this economy is doing pretty darn good, right? Inflation's nowhere, unemployment's extremely strong, and we're giving more free money. I'm not thrilled about it.